All right. Thanks everyone for taking the time to join the DeFi and venture capital panel here. First want to introduce myself. I'm Clay Robbins. I'm a principal at Slow Ventures. We're a generalist fund, but I spend all of my days focusing on early stage crypto. On the panel today, we have some fantastic distinguished guests, including Sunny from Hashkey, Adam from Collider Ventures, and Peter from Jump Capital. So thank you all for joining, talking about the state of venture capital in the context of DeFi, and I'm sure there's plenty for us to dig into. But I guess to get started, let's set the stage high level. And maybe Peter, you can start us off here in terms of what's the state of the fundraising environment for venture and especially in the context of DeFi?
Yeah, absolutely. So I'm with Jump Capital, where we're a venture capital firm. We've been investing in crypto and DeFi starting in 2015. That's when we made our first crypto investment, and we're investors in many of the leading companies and projects in the crypto space. We're also we're co-founders of the DeFi Alliance, which is one of the leading DeFi accelerators, and we are funded exclusively by the owners and employees of Jump Trading, which is a leading trading firm, both in the crypto and non-crypto markets. Has an 80-person crypto trading team. So very deeply ingrained in crypto and DeFi. The fundraising environment right now, I would say it's a healthy fundraising environment. Good projects are fairly easily able to raise right now. There's a lot of folks that are looking to deploy capital into crypto and specifically into DeFi. So it's certainly a healthy market for good projects.
Yeah, that makes sense. And I guess, Sunny, what role do you think venture capital plays in the context of DeFi, maybe contrast it against traditional venture, if at all?
Yeah, absolutely. Thanks. First of all, thank you very much for having me on this panel. And a little bit intro, Sunny He, US advisor for Hashkey Capital. And Hashkey Capital is supported by Wanxiang Group, which is one of the largest conglomerates in China. And our group started to invest in crypto since 2015. And we were the first corporate investor in Ethereum Foundation. And we have already deployed over 300 million into over 400 projects. And under the Hashkey brand, we have crypto exchange, digital wallet, OTC, and trading desk. So Hashkey right now, we are managing about over 500 million US dollars. So the contract to the traditional VC, and for the VC role in the DeFi space, we see this in this way. I would like to say, for instance, what we have see the change of the VC role and what has not changed. So for instance, I think a big change for DeFi will be there will be require more engagement from the VC into the DeFi project. That includes, for instance, being the liquidity provider or being the community contributor or being the ecosystem builder. So that all requires much more time and attention from the VC space, and also resources pulling into the DeFi project, right? But on the other side, what we can see is that change, I would say, that has gave quite a number of chances for the new VC or newcomer in this DeFi space coming to start to rise. And but on the other side, a VC with long established history, like Hashkey or, for instance, like Polychain or those big names, I think they are also playing a very critical role bridging the traditional VC and DeFi projects and also the financial institution. For instance, that we see quite a number of deals right now, like Tiger Global or SoftBank are coming over in the CFI space, and they're like picking up the blue chips. And those are those financial institutions actually have to rely on the knowledge and insights with the VC that has a long track record, and also have their knowledge know-how in this space. So we see quite change of the landscape of the VC. There are quite a number new VCs coming up in the past 1 or 2 years, but long-term VC with established track record also play a very significant role to bridge the traditional world and the new projects. Yeah.
Yeah, I love that contrast between sort of what's happening in the evolution of structures for crypto native venture capital, and there need to be more active participants in the context
Absolutely.
of the projects that they fund versus Tiger Global, which is sort of the antithesis of it, price agnostic, fast deployment of capital, and they kind of get out of founder's way.
That's so insane. Trust me.
Yeah, so it's a good contrast. And Adam, as these models have sort of started to form and best practices have started to be established, what structures are you seeing that are working either in the context of what you're doing at Collider or more broadly in terms of venture funds that are participating in DeFi in earnest?
Hi. So again, thank you for inviting me on this panel. So my name is Adam. I'm the general partner at Robbins of Ventures. We're a VC fund out of Israel. We deploy capital not only in Israel, but across the world as well. We have two vehicles. The first one is the Robbins of Venture, which is a fund investing in pre-seed and seed and DeFi application. And we also have a Collider Labs, which is a venture studio, which basically is a much earlier vehicle that kind of incubate and invest pretty early. We invest between $50,000 to $200,000 in company or networks that just get started. And then we typically bring a lot of hands-on support from development to working on the pitch and hiring people and connecting to other business partners and et cetera, et cetera. And I've been at 500 Startup before that, so I've made the bridge from regular VC to VC in crypto, and I can support what Sunny just said. It requires us to be more activist VC, and basically be participant in the community itself, which is pretty humbling because you have to deal with many participants and not just the founder. In terms of what we've seen in terms of structuring deals, we've seen everything. So we're pretty agnostic in how we invest. We invest in equity, we invest in token, convertible note, SAFT, whatever. We pretty much invest wherever we think the value accrual will be. And obviously in DeFi, we believe it's in the token itself. But we've seen also places where there's a token and also an equity element. And so we try to invest in both the equity and the token itself in order to be pretty active at both levels. We've seen places where I've invested, for example, in Nexus Mutual. I've invested in the treasury at pretty much the beginning, and then at some point we've led an investment in the treasury, which is kind of a Series A, I would say, investment. And I would say typically when you invest in a later stage where there's a treasury diversification, sometimes you invest not just in the token itself, but you also invest in some sort of options or warrant where you want to have less. You want to take less tokens, and you want to give some sort of options in the future where the token price cycle will go up, and then you'll be able to buy more token at a higher price. One thing that I've seen that is pretty interesting in between regular VC and VC in crypto network is that regular VC want to own as much as possible, and they have like a target ownership of 20-30% of the company. And then when you look at the you look at investing in DeFi or open networks, you want to own as little as possible, but as much as you as you can in order to make an impact. So it's always trying to find a balance between getting the token at the right price, being able to have the right vesting schedule, and at the end of the day also having the right vesting schedule for every for all the participants, all the different participants.
That makes sense. And maybe this is a broader question, but focus on the same theme here. What sort of help or participation do founders typically look for in the context of partnering with your guys' funds in terms of DeFi native investing? So I'll take that question because it's kind of continuation of what what I've said earlier about Collider Labs. That it really depends, what stage the founder are at. But what mostly we found out is that what they need help with the beginning is trying to build
the right token economics, understanding what is the product, understanding how to bridge or how to bring the community. So I believe that the product is basically the community, which is the most important aspect of building today an open networks. So if you're layer one or layer two blockchain, for example, you need to bring a lot of developers building on top of you, which is crucial. And so building the right incentive, building the right language, and targeting the right developer, or targeting the right stakeholder is very important. And even being very active at the beginning, part of the governance and voting on proposal, bringing up questions and everything. Just seeding that first few months or first couple of weeks is very important for the founders. So founders want funds where active participant and can bring pretty specific knowledge and hands-on support.
Makes sense. Sunny, Peter, anything to add there?
Sure. So, for instance, like Hashkey really specializes in Asia. So, I think just to our experience, that most of the projects that come into us for multiple reasons, and one is important is the Asian community, which right now Asia contributed almost like 90% of the trading volume, and also the developed community where they're looking for active developer which they can continue to build the dApps on top of their protocols. And Asia community like Chinese community and Vietnam, Korea, Japan, which are very different community with different languages and different resources. So those are, a community building is one of the major source that they're looking for. And secondly is developer community, that they try to have more developer regardless where they are, they try to get engaged. And besides developer, they also looking for, general, those are all related that, for instance, like the local managers, for instance, like APAC region or China in particular, that they're looking for those hires that they have to have help from the VCs with regional expertise. And besides that, as I mentioned that in the very beginning, I think for DeFi project in particular, they are always looking for a liquidity provider. So to have some seed capital in the equity space, and also have some token where they can bootstrap the initial capital flow or the capital flow on the platform. So those are very general that elements that we have received the request from the projects, and have trying to be as supportive as we do.
Yep, that makes sense.
Yeah,
Peter.
I would echo that. When we work with projects, there's a variety of ways that we work with them, from token design to participating in governance, both voting and also writing governance proposals and things like that. As Sunny mentioned, providing liquidity is a big need for a lot of these early stage projects. So that is something that being part of a very large trading firm, we can help a lot with providing liquidity. Also help with token listings on decentralized and centralized exchanges, and providing liquidity through those events.
Yeah.
And then we also just provide some of the platform services that we provide both to our DeFi and crypto companies and our non-crypto companies, things like hiring and customer acquisition, just those things that you need to build a business, build an organization, or other things that we help with.
That makes sense. And we've talked a great deal about tokens. Obviously, this is a crypto VC panel. But do you internally at your funds have a framework for what you advise or how you communicate to founders about one, whether or not a token makes sense? We have a number of developers in the audience today that may be hacking on something that could inevitably be a candidate for applying a token. But how do you frame those conversations in the earliest stages with founders around whether a token makes sense, whether equity makes sense, and how to sort of contrast the two in putting together a financing?
Yeah, from my perspective, it depends on the kind of what you're building. And there's some types of companies that are kind of inherently, kind of crypto native, and a token, makes sense for them, as there's, good value accrual mechanisms to a token. You want to build community with the token, those types of things. And then there's other companies that, don't. If you're building, B2B SaaS company that happens to be in crypto, it doesn't make sense to slap a token on it. You should just have an equity based company. So there's obviously some gray area in between those two, but at least to me, after spending some time with the company, it typically is fairly obvious kind of on what side of the fence it should fall on, if it would make sense to have a token or not, even though it's maybe not easy to articulate.
Go ahead. Sorry. So yeah, what I found out is that I think somehow the industry has kind of matured, because I find myself less and less, today having to tell the founders not to do a token, for example, as opposed to 2017 and 18, where pretty much 90% of all the founder would come to raise money from us. We just tell them, the token doesn't make sense. It's just a way for you to raise money. But yeah, most of the time in DeFi and what we've seen recently, the token is really needed, either because there's need to be some sort of incentive in order to secure the network, or there's need to be some way to accrue value, not through equity, and have a decentralized and much more open decentralization and participation from participant, as opposed to a company who just have equity. But yeah, it's definitely another question that I've had to ask lately, which is great.
Yeah. Sort of echo the two speakers, and also from our perspective, just as there are some projects and founders in this hackathon, and from Hashkey perspective, or even just for myself, we tend to see founders, they have some clear picture or idea to formulate their own token plan or equity plan, because in the end it's their own business, and regardless how much that we can help, and he or she has to understand, have a clear understanding what will be the, dynamics of the play is going on. So, and also, as Adam mentioned, that we do tend to see, there are less and less discussion around the token economy, because the format and or the idea is sort of already well established. So people just follow some pattern, or there are some creation here and there, but not too much yet. But again, just as for us, we tend to see founders has more clear design of their token economy, and also we tend to see founders, have even better understanding than we do. So this is something that we have seen as well.
Yeah, I think that's fair. And in the structures of different rounds that are coming together in DeFi, and I know things like SAFs, safes, and token warrants and the like were all mentioned here. But one that I'd love to cover specifically is around DAOs and the emergence of things like treasury diversification events. I think, Adam, you mentioned that you've been a party to a few of those, but how should venture capital, or how does venture capital, either your funds or as you see across the ecosystem more broadly, think about DAOs and in the framework of the traditional VC model, and how they should play in that world?
Yeah, it's a good question. We've spent a lot of time lately thinking about DAO, but more from a legal perspective. It's something that kind of gave the nightmares to our lawyers. And we have an inside counsel, because we found out we're pretty small fund, but we're probably one of the only fund in Israel who have inside counsel on top of external counsel, just because we have so many questions we need to answer, and we need to have the expertise inside. And so question around liability. Do you have liability by purchasing directly from the treasury? By voting on certain proposal. For example, voting on basically creating a new token. What happens if the token is becoming a security? Is it possible that the SEC will come after you and tell you, okay, you've just approved, issuing security to non-accredited investor, for example? So DAO, from my perspective, are amazing, because they allow so much, flexibility. They allow They allow what I've seen in open source happen, for a very long time. Basically, the emergence of the community being so involved and having so many stakeholders. In open source, you see a founder who starts something, a project, and then he might go away after a couple of months, and there will be other people participating and then carrying forward the torch, which is amazing. And I think that make DAOs more resilient. It's harder to kill them. Community tend to form around an idea or something like that. So from our perspective, I don't know if that answers your question, but
yeah.
When I think about DAO, I like the fact that there are, they exist. I do understand that there are some legal perspective that we still need to solve. I think we need to find a way to bridge between the real life and DAOs and kind of solve the liability issue at some point.
Yep, I think that's fair. Peter, Sonia, anything to add?
Peter, you want to go first?
No, I mean, I think that the legal questions around DAOs are really good ones. I think that in a lot of those will kind of still to be answered. The concept of DAOs, I think is fantastic. I think it's a way to democratize access to investing and kind of do it in a new organizational structure, which is beneficial to the community. So I am very kind of bullish on the future of DAOs as an investment vehicle, kind of with the caveat that obviously some legal questions still remain around them.
Yeah. So, personally, that I personally am very bullish for the future of DAO. That there are just multiple formats of DAO, and for instance, like social DAO, investment DAO, or NFT DAO, just so many formats of DAOs. And I think there are so many DAOs, are new concepts of DAOs coming out. But that just use investment DAO as example. That we see the DAO right now really democratize the access of the investment opportunities from the whales and even the retail investors. That's one thing. But we still believe that DAO is still at the very early preliminary stage, where there are still missing there are a lot of missing doubts in the whole process of investment. For instance, like in the traditional VC, that we have fundraising or deal sourcing, portfolio management, and asset management and exit. So if we just trace back the whole just workflow of the VC investment, and we have already seen DAO has fulfilled some of the function of feature of the investment, like for instance, like fundraising or deal sourcing. But I feel like still missing points in portfolio management and exit and asset management, where gives the founders opportunities to build tools on top of it, where manage the communication or manage the asset or manage the portfolios, where if the DAO would have to get certain point where having more capital in the space or having more participant in the space, I do believe that more tools have to be needed in order to facilitate all the communication or logistics in this space, in order to make sure it can go from and have a end-to-end solution. So I do feel like in very early stage, quite a number of investment opportunities in this space, and a very bright future, and very excited for this space.
Yeah, no, I agree. And I'm personally excited about it as well, too. And the emergence of things like the Lao and companies that are raising as DAOs from day one. And it's not actually the core team that is the entity. It's possibly a third party that's contracted via the DAO. So you're not even, the counterparty isn't even the individual core team, but the DAO itself, which, as in venture, you just kind of have to embrace that ambiguity. But the thing that you get there, right, is the resiliency of the community, and that even if one team does sort of drift away in terms of its core contributions, there's always others that can pick it back up, and that's the beauty of on-chain governance and entities and the like. So it's all great. I guess turning to the future and how you think about the opportunities within DeFi that are yet to be created. We've had basic primitives like exchange, lending and borrowing, options, margin. Basically, anything that's existed in the traditional world has been recreated or reinstantiated in DeFi. But as you look to the future, what are some things that you all are excited about and interested to dig in with founders that are thinking about these ideas or are already building them?
Yeah, one of the things I'm really excited about is increasing the accessibility of DeFi. That a lot of DeFi, we built these kind of great products that you can do, trading and saving and lending and borrowing and getting insurance. But really the users of them right now, it's, a small number of DeFi native folks. So bringing that out to the, kind of greater world of non-DeFi native people and really, enabling those financial services, to the world and offering financial services in a new way to people that perhaps did not have access to it before, or just that did have access, and you can do this in a better way now. Like that's what I'm really excited about, because like as you mentioned, I think that a lot of the kind of the primitives have been built, and now it's how do you deploy those.
And from for me, I would say, how to, what are the opportunities that really connecting the DeFi and CeFi, where, we talk about like TradeFi will be something I think very interesting to explore that we see recently like Avi, they launched the Avi Pro, where apparently is a great experiment to test the link in between the traditional financial institution, hedge funds, where the huge capital is really reside, and how to bridge the potential, how to take advantage of the capital efficiency or features, technologies in the DeFi that apply that into the CeFi world, where continue to promote the capital efficiency and also bring, I wouldn't say compliance, but risk management factors into the DeFi, so that to guarantee the security of the principal of the investment of the retail investors. I think those are the two things the DeFi can learn from CeFi, and CeFi can also adopt from DeFi. So those are the things that we're going to be very excited to explore as well.
Yeah,
I agree with Peter regarding I think DeFi need to kind of get some sort of consumerization. So we need to see more consumer application, more accessibility, and we've backed a wallet and a couple of other companies that are doing something in the space, so that's great. I'd love to see. So the future for me is, and the thing that are exciting to me, one of them is probably pretty boring to most, but regulation and compliance. I think DeFi is in a crossroad where we have no idea where it's going in the future. I mean, we don't know what's going to happen with the FATF and a bunch of other task force who are just looking, DeFi. I have no idea how to actually deal with it. And so I think we need to kind of level up and put together, all kind of different tools in order for these folks to kind of feel a little bit more comfortable with DeFi. And if I'm an institutional investor and I want to put money into DeFi, I want to be able to do that with selected counterparties, so not very permissionless. But it should be still my option. So that's one aspect that I'm looking at, which I'm very interested in. And I'd love to see more people building, and I don't see enough of them. Second is, and it's not really related to DeFi, but the creator economy. So I'd love to see more people in the future, doing things. For example, playing games. Creating all kind of different stuff that will earn them money, and specifically bring liquidity to those markets, and kind of become a huge market with like a liquidity pool for even asking for favor or stuff like that. Once you have several type of things that you can lump them into a pool, then you can create liquidity for many stuff like that, and it's interesting. And the last thing is basically kind of connecting real world asset to DeFi. I thinking all the time, what happens if we take a building and then we tokenize it, and then we bring it as a collateral to issue more DAI or to issue more USDC or whatever, then you basically increase exponentially the amount of money that will be and the liquidity in DeFi. And in the future, I think instead of buying an apartment, which is kind of illiquid and inefficient, you might want to buy like 5% of an apartment in a certain street, and maybe another 5% of an apartment somewhere else. I think there's a lot of things today that I'm doing that are so inefficient that I think could be more efficient. And if you connect compliance, you connect consumerization of DeFi, better app, and then you connect the better liquidity, then you create this world where things will be better in the future.
Yeah, that all makes sense. I think there's some salient points in there insofar as regulatory oversight, especially like we've seen in the last week in the US, not that the US, necessarily matters in the context of global permissionless finance, but it's a massive pro that it is sort of at the forefront of regulators' minds, but it's also the con as well too. But clarity, I agree with you, Adam. Drives comfort with those markets, even after you kind of get over the hurdles of things like smart contract counterparty risk and the like. And the other one too, in terms of gaming, being sort of the Trojan horse to invite mainstream adoption and creating sort of economies around gameplay, I think are awesome. We've seen that in the recent examples with things like Axie Infinity. So that's well stated. I think maybe to wrap up, one additional future-looking question, we can go around the horn on this, is what do you think the future of venture in the context of DeFi looks like? Does it sort of remain the same? How does it evolve? Are you guys going to tokenize all of your funds and be DAOs with thousands of LPs? What does the future look like for venture in terms of DeFi?
Yeah, I think the future for VC and DeFi is that you really are going to have to be value added to be a serious kind of player. And that's kind of going back to what we said at the beginning. Like, you need to be, providing liquidity, participating in governance, helping with protocol design, maybe doing blockchain engineering, helping with token launches, maybe helping with hiring and customer acquisition, those types of things that you can do as a VC, and you can provide value outside of capital. Because capital, becomes more and more of a commodity, especially in crypto. When you can raise from DAOs, you can raise from people around the world. Like the capital isn't why good protocols will come to you. It's all the other, value-added services, I guess, that you can provide. So I think that's kind of where we've seen VC go, and I think it's just going to keep going more and more in that direction.
Yeah, I had that. We thought about it for a long time. And I think also the traditional VC world is also changing. You're seeing more and more, VC were more like guild of people, like Global Village, where you have a lot of LP who are pretty active, etc. But the thing in DeFi and in crypto is, we have a lot of LPs who are very active, and they provide a lot of different services, and so we rely on them a lot. Most of them are crypto native. They've been in crypto since 2011, 12. And so they provide liquidity, they provide help, they provide connections. But the problem is, again, we're getting back to compliance and regulatory hurdles, in Israel. And I hope the Israeli tax authority is not watching this session. But there's actually a rule that basically states you can't have your LP active because, there's a ruling that allows us to get some tax treatment. And if your LP are active, then suddenly they'll take away that ruling from your fund. And so it's kind of counterintuitive because you want to be more like the DAO, you want to be more like a DAO, you want to be a guild of, people. Another thing is, how do you make a fund more, more egalitarian? Today, most VC funds have a GP, pretty much like 2-3 general partners who are splitting most of the carry, and then you have a bunch of other people working in the fund. For the other fund, everyone is getting carried and pretty well compensated from carried interest. And in the future, I would love to have 20 people working in the fund and having to split the carry between all of them, and maybe tokenize carry and give that carried interest to people who are helping, bringing deals or whatever, and becoming like this flexible, huge fund that just create massive opportunity for everyone to be involved and for everyone to get funded. For example, we're also thinking about tokenizing carried interest and giving that away to founders in our next fund, because we believe that founders are also a pretty large stakeholder of a fund. So yeah, I love to kind of do crazy stuff in my fund. The only problem is that I also have to do it in a legal framework in my country, and there are things that I can't do, or there are things that I'm going to have to do, and be pretty creative about them in order not to get a slap on my wrist.
Yeah, from like what we've seen that a VC that has been in this industry for a while is sort of in the middle. That one side that they're facing the uprising challenge. I wouldn't say challenge, like from the DAO, like the Lao or some decentralized platform that they can or big whales that they can easily get to be the liquidity provider and make investment into the project. And on the other side, and we also see like traditional VCs, Sequoia, SoftBank, Tiger Global, all coming through huge chunks of money coming in the space and making the capital really become the commodity in the space. And that, I think, as Peter just mentioned, really driving all the VC have to think about, hey, how to be more value added from both the perspective to protect their own self and also be more accessible to the founders. So at least I would say that in the short term or in the short middle term, that like VC or blockchain crypto native VC, there has to be more value add and be hands-on. So from marketing perspective to build influence not only for your own brand but also for the for your portfolios, and also just having more resources aligned to be supportive for your portfolio and for yourself. And also, hands-on in the perspective, being a liquidity provider or node operator, to have more insights in what are the pain points of this industry and where it really creates the investment opportunity moving forward. So that's the short and middle term that I see for most of VC will have to be in that position. Otherwise, I think they're going to be wiped out by this market. And in the long term, whether the VC has to be tokenized or I think it's really something very interesting to observe the trends moving on. But it definitely, as Adam just mentioned, it takes questions around compliance, regulations on different jurisdictions, so and tax issues. So that's something that we have to be carefully monitor in the long run.
Yeah, of course. So more active participation, different structures, adjusting and improvising, and trying new, crazy, interesting things. I think that's a good summary for and things to watch over the next few years. Well, this has been an awesome panel. Really appreciate your guys' perspective and hope that everyone in the audience found this engaging and interesting as well too. So really appreciate the time, and until the next one. Thank you.
Thank you, Clay.
Thank you.
Thank you, everyone.